Some people feel that the stock market is a complex place where you gamble and lose money. These same people, they often support initiatives like lotteries where there is lesser chance of you winning than if you invest in the stock market. And a common argument that we see is that you need a lot of money to win in the stock market. So if you feel the same way, then this video is for you. We'll be discussing a simple and diversified portfolio for just under 500 rupees with which you can stay invested for the long term with confidence. So let's jump right into the video. This is Market Feed. Let's get started. Last week we discussed one interesting and important investment tool that you can add to your portfolio, that was Nifty ETFs, to be specific Nifty Bs. Using Nifty Bs, you could invest in India's top 50 companies in the Nifty 50 to be exact and never be worried about your long-term investments. But here, one problem that arose was that it was not a stable portfolio. It had all the drawbacks that equity alone would have. Whenever the market crashes, we could see your portfolio going down into the red like it probably is right now. So what is the problem that we are trying to solve here? The previous portfolio, it offered higher returns, but with lower stability, it could often go down and dip into the red. So we are trying to solve that with two investment products. Let us check out what they are. It's fairly easy. There are two other ETFs or exchange traded funds with which you can easily diversify your portfolio. The first one that you have to know about is something that you should be knowing about. These are gold ETFs. When we are talking about gold ETFs, obviously the first one that comes into mind is Gold Bs, which is offered by the same company which creates and manages Nifty Bs. So Gold Bs is an investment product which tracks the price of gold. So if you invest in Gold Bs, it is exactly like you're investing in 99.5% purity gold. So whenever the international prices of gold moves up, the Gold Bs also moves up. Whenever the international prices of gold moves down, Gold Bs would also move down. So it is a much better investment than physical gold, and it offers you similar returns in the long term, just like any gold investment would. And the best part about this is Gold Bs and other similar gold ETFs can be bought for as low as just 60 rupees. So why are we looking at and investing in gold in the first place? Oftentimes we see that gold has a stable characteristic. It does not move up by much. At the same time, it does not crash by much. So it gives your portfolio the much needed stability that it probably needs. Even when the equity market crashes, with the 60 rupee investment, you can easily hedge your investments. And oftentimes gold prices move up when the market is falling. If markets fall due to a geopolitical tension like the Russia-Ukraine war or an uncertainty like the COVID crash of 2020, we often see gold prices shooting up. So your investment, it acts as a hedge to your equity investments again. So investing in gold alone can give you good returns, at least better returns than that of FDs. And if you intelligently combine this with other investment products that we had discussed like Nifty Bs, you can easily generate good returns from the market. So the next asset that you need to know about is liquid Bs. It is a debt-based ETF. That means it invests in bonds and securities that are fixed income securities issued by companies, governments and whatnot. And the historical returns given by liquid Bs is often around the range of 5 to 8%. But it is a very stable investment because it invests in bonds and such securities. And talking about liquid Bs, the product is designed in such a way that the price of liquid Bs always stays around 1000 rupees. Any and all profits that this ETF generates, it is added as extra units to your Bs investment. So imagine an example where you have invested 1 lakh rupees in liquid Bs. You'll be allotted 100 ETFs worth 1000 rupees each. So hear me out. Imagine in the first year if you get a modest return of 6 to 7%. Let's take 7% as an example. So the 7% returns that the ETF has returned or given you will be added as more units of the ETF. That means the 100 shares of liquid Bs or the 100 ETF units of liquid Bs that you bought would have become 107 units by the end of the year. Again, since liquid Bs invest in debt-based products, it is more or less stable and has historically almost always given you a stable return of this percentage. So for high returns on your investment, we go for Nifty Bs, which invest in India's top 50 company stocks and along with that we had gold Bs for protection against uncertainties in the market and liquid Bs as a stabilizer to your portfolio. So for anyone who was looking to understand what they should be investing in, these are the products, right? There is Nifty Bs, there is gold Bs, and there is liquid Bs. But something we have not talked about is how to build a portfolio using these three assets, and that's what we'll be doing in the next segment of this video. So the first model portfolio that I would like to talk about is just Nifty Bs and Gold Bs as your major investment. So why do I feel that this is a perfect investment strategy for newcomers in the market? Because Nifty Bs gives you the returns, generates better returns than most mutual funds, as we saw in this video, and gold Bs, it protects you against uncertainties in the market. And in this portfolio we'll be giving around 70% weightage to Nifty Bs while giving 30% weightage to gold Bs. And in order to satisfy that ratio, you should be investing in one Nifty Bs ETF for every 2 gold Bs ETFs that you invest in. And as you can see, the minimum amount that it comes up to is much lesser than 500 rupees actually. It is just around 300 rupees or even lower at this market point. So now that we've told you what to invest in and where to invest, let us look why you should be investing in this. So imagine you had put the same amount of money in just Nifty Bs, which is just equity investment, and the same amount of money in this portfolio that consists of gold Bs as well. So when you're looking into the chart, it is very evident that whenever there is a big fall in the market, our portfolio does not fall by much and it provides enough and more returns as well. So it is very evident from the chart that whenever the market falls, like during this COVID crash of 2020, our portfolio stays strong. It does not fall by much, and whenever the market actually moves back up, our portfolio also moves back up. So everything is looking good, right? This is a simple hack with which you can diversify your portfolio. Just add gold Bs to your investment in the ratio that we just talked about. So even though this portfolio can be bought for just over 250 rupees, if you are ready to invest 500 rupees, yes, as the title and thumbnail suggests, you will be able to get more units of these ETFs, and in the long term you will be able to generate more returns. And once again, this portfolio hedges you against market uncertainties, that what if suddenly a COVID crash comes, or suddenly a Russia-Ukraine war, or something bad happens in the global economy, then this portfolio will somewhat protect you in the short term. Again, once again saying that Nifty Bs is a really good investment for the long term, but if you are a short term investor, maybe for the next 5 years you are planning to invest, then definitely think about adding such a hedge to your portfolio, something that will make your portfolio more stable. And yes, that is it. It is that easy. This is all you have to be doing to be building a model portfolio that you can boast to your friends about. But what if you are asking me, Ajay, is there something which I can do to make my portfolio more stable than this? Yes, gold Bs and Nifty Bs, it is a good investment. But if you are a short-term investor and you would like much more stability in your portfolio, you can think about adding liquid Bs into the same gold and equity investment to make it more stable, so that even if the market falls like it is doing now and gold prices do not shoot up by much, your portfolio will still remain stable, as we can see in this chart here. So the one drawback that we have here is sometimes when the equity markets tend to do really well, our portfolio will lag behind it. But I am saying if you are a short-term investor, it is nothing to be worried about. Because more importantly for you, this stability is what you should be seeking in a short-term investment. See, even during the COVID crash, the dip is quite small compared to what happened to equity in the market. But even when the stock market or the equity market is moving back up after the crash, our portfolio still remains stable. It keeps on going up and up, but not as much as a normal equity investment would have. But yes, if someone is adding this liquid Bs component to their portfolio, they are looking for this stability, as we can see in this chart, and not the high returns that just the stock market gives you. So when you're asking me about the weightage of these different ETFs that I should be having in this portfolio, it is around 50% for Nifty Bs, right? Because we are still investors in the stock market, we would still like some high returns whenever possible. And to keep our portfolio stable and safe for the long term, we'll be adding around 25% as gold Bs investment and around 25% as liquid Bs investment. So just like the last portfolio, let us discuss how many quantities of each ETF ETFs you should be buying. In Nifty Bs, you should be investing 12 quantities and buy 23 quantities of gold Bs to maintain the ratio and 1 quantity of liquid Bs. This would cost you around 4,000 rupees to build your entire portfolio, but I am saying it would be worth it for the stability that it provides. And if you are an intelligent stock market participant, you can check out when the market is dipping. You can reduce your investment in this liquid Bs, which is a debt fund. You can shift that extra investment back to equity and gold. So what is happening here? Imagine you are a regular stock market participant and you see that the market is falling. There is no point in investing more in liquid Bs because at this point you can get Nifty Bs for cheap, right? So whenever the market falls rapidly, whenever it is at a huge low, you can think about foregoing this liquid Bs quantity and investing that amount, which comes around 1,000 rupees, back into just Nifty Bs. So this is a portfolio which helps you make intelligent decisions in the long term. Whenever the market dips, you can rearrange your portfolio, you can invest more into equity so that you can make the most returns from the market. This portfolio would have returned you around 11% compounded annual growth rate, but I'm telling you, it is worth it for the stability that it provides. So now that we have decided where we are investing and why and how we are investing, let us look at how we can open our broker's terminal and actually put in these numbers, set an SIP, a systematic investment plan, to make sure that you keep invested in the market for the long term. So yes, I've opened my Kite terminal here, which is the web terminal by Zerodha, and if you do not have a Zerodha or a broker's account, you can easily open it by clicking the link in the description. The first thing I'll be doing here is to add Nifty Bs, Gold Bs and Liquid Bs to my watch list. Now that I've added it here, just click on the buy button. Make sure that the CNC or the long term option is selected and enter the quantity with which you want to buy and just hit on the buy button. It is as simple as that. Make sure you do the same with the gold Bs and liquid Bs assets as well. Now this is a request which I've gotten as well, how to create an SIP in Zerodha. So to create an SIP in Zerodha, it is fairly simple. I'll just show it to you in 1 minute. Adi, start the timer. So if you want to start a systematic investment in this portfolio, you can just come to Zerodha, open the or click on the orders tab, then click on the baskets tab as I have done. Now click on new basket and just add a name to your basket. Now just add the necessary investment products to your long-term investment portfolio. So now I have added both Nifty Bs and Gold Bs in the ratio with which I want to buy them. Just click on the close button, go back to the SIPs tab, click on create new SIP, select the basket which you want. Now you can easily select a monthly schedule with which you can buy these stocks automatically through your Zerodha balance. So here I am setting up the first of every month at 9:30 AM. These stocks at this ratio will be bought and just create the portfolio. So yes, it is that simple. In just a few seconds, we have created an SIP in Zerodha with which you can automatically keep invested for the long term. So the conclusion of this video is as follows. You can keep invested in the long term in the equity markets with just Nifty Bs if you want to, but that should be an investment horizon of at least 5 years, 10 years or even more. If you need the necessary stability that a short-term portfolio requires, you should be adding gold Bs and liquid Bs to your portfolio. So we have learned with just 250 rupees how we can invest in a long-term portfolio and create a well-diversified and balanced holdings for your long-term investments. So hope everything in this video is very clear. If you have any doubts on any topics that we have discussed, comment down below and let us know. This is Ajay signing off. See you in another video.